Brent, I plugged in a question to the AI today for us related to the Fed to kind of see what the narrative is. I think you pretty much hit it the way the market sees it already, which is that the market, is saying volatility is likely to subside, and that this is likely to be a volatility diffusing event. But the AI kind of came at it from the macro perspective, which I thought was kind of interesting. Which basically is, I said, look, what's the market response effectively of AI, of the Powell cutting? And essentially, it says, look, you want to make sure that we're cutting for the right reason. It's not the notion that rates are lower. It's how the signal is received and transmitted. It says that it works only if banks and borrowers actually use cheaper credit. Otherwise, it just inflates assets, which I think is kind of funny because obviously it might be a little too late for that part. Long-term cuts can trade today's stability for tomorrow's fragility. I mean, look, do you see any catch-22 in cutting rates here from the macro perspective, or is this just something that once the market's priced it in, you got to do it?
I mean, market is totally priced it in. 94% odds of a cut today. There's millions of 3 rate cuts this year. The retail sales number was pretty good yesterday. So there's some conflicting kind of evidence or conflicting narrative around, do we get more cuts than this? Today is definitely priced in, and rates seem to have been sliding lower. So that's all true. And for Powell to sort of upset the apple cart here and get the market sliding south would be not a change necessarily for today. So everyone knows we're getting 25 basis points today. That's almost guaranteed. So what is the forward guidance, right? And forward guidance is everything. And if Powell deviates from that, then you should see vol move and you should see equities move more than anticipated. If you deviate from consensus, that's where the trouble comes. So, I think there's a little bit of hand-wringing now due to the retail sales number yesterday. There's some conflicting evidence that things are actually that weak in the economy. And so do we get the 3 rate cuts that it seems like we're headed for? Not too long ago, we were talking about maybe getting a 50 basis point rate cut today. There's a giant options traded in the STIRS market that was sort of related to this as well. So, there's still the question now is like, do we get more than 25 bips into the end of the year? Do we get 50? Or, do we get another 3rd rate cut? Or are we done here, right? And I think if the market starts to come around to the idea that we're done here, then maybe that sort of leads to a little bit of an equity interim top, right? But the kind of fact here is that we've rallied about 2% over the last week and a half, and that has added a fair amount of stability to the market. And now I think with that retail sales number, with the speed of the rally, vol's now up a little bit, which gives you a little bit of padding, right? Because if we were heading into this with even lower implied vol, then I think the risk of the downside would be sharper. So I've had to kind of like tone down the bearish language a little bit here due to the way the market's starting to price in the risk. But kind of the fact is that there's some support in this market right now. I think the narrative is pretty clear. People know what to expect with 25 bips today. And, unless Powell kind of goes really hard on the hawkish side, then I think we kind of got to assume that's business as usual and start looking at some of those upside levels.